China point is absolutely correct. China gets a larger share of the overall global foreign investment pie, no question about it. But in absolute terms, foreign investment, U.S. FDI, continues to pour into Southeast Asia, into Singapore and the other markets down here. The point is, U.S. businesses find this region attractive. They have, in recent years, found China relatively more attractive. So U.S. companies are entering here and also entering China. So there's two things going on at once.
A number of U.S. companies have recently expressed to me concerns about coming here to the region because fear of SARS. Can you give us an update on the situation with SARS here in Singapore?
Yeah. You know, it was pretty impressive. To my mind, it was sort of Singapore at its best, the emergency steps the government took. Because what they had at stake here were several aspects of their society. One, the health of their citizens, government's first responsibility. But also, Singapore has this very privileged position as a business hub. So if anything is done to make Singapore less attractive, it has enormous economic consequences. So what did they do? They put in thermometer scans at all the airports and ports. So anybody coming in or out got a temperature check, was checked for a screen for SARS right away. They put in the same scans at all the government buildings. They put in the same scans for everybody serving in the military. They put in the same daily temperature check for all school children. The point is, very quickly, within days, you get your arms around this, you can isolate this problem, make sure it doesn't spread. Interestingly, not one American in Singapore died of SARS, not one American in Singapore got sick from SARS, contracted SARS. So it was a very strong success story for Singapore.
There are a lot of U.S. businesses here in Singapore that make this their base. What do you hear from them about the midterm or longer-term prospects of the economy in Singapore and the larger region?
Yeah, interesting. The American Chamber of Commerce here did a survey. We have something like 1,500 U.S. companies in Singapore. 90% of those companies have responsibilities outside of Singapore. We should say only 10% of them just deal with the Singapore market. 90% have some kind of regional, sub-regional responsibility. Because this is such a good platform for operating something in the region, survey after survey shows Singapore is the best place or one of the best places to do business in Southeast Asia or all of Asia. There are all sorts of annual surveys of membership about where can you conduct a transaction, when do you have legal recourse, where do you have property rights, where do you have enforceable contracts. Singapore just wins tops on all of these points. I think they have the advantage, as we do, frankly, of coming from that British colonial background where that private property is ingrained part of the body politic of the civic consciousness.
There are many U.S. businesses based here in Singapore, and some of them use Singapore as a base for the entire region. What do you hear from them about business conditions in the region going forward?
Yeah, but let me make a general point, if I can, on economic prospects. Look, the U.S. economy is having a soft year in 03. We think 04 will be better. Most people seem to predict. But if the U.S. economy is soft in 03, maybe GDP rate of 2.5%, no U.S. company is going to voluntarily close its operations in the U.S. We wish it were 5%, but it's only 2%. Still, we do the best we can. If it's 2% nationally, that might mean there might be one region or one state where it's flat economy, or sales are flat. Still, no U.S. company is going to withdraw from that market. I would make the same point about the markets out here. Some markets are growing reasonably well. Indonesia's got 4% growth this year. Malaysia not quite that high. Still, if it goes to 2%, you don't pull out of a market. You've got to have the wherewithal to get through weak periods, and you can enjoy the strong periods. You can't simply go in and go out depending on GDP growth rate. That's not how we operate domestically. I would advise companies to operate that way overseas.
During the past year and more, there's been an economic slowdown in the region and also a slowdown in growth in the United States. What are the prospects economically for Singapore, Malaysia, and Indonesia?
Well, you have to be prepared for that volatility, is my point. Not every day is going to be a sunny day. That's true in the domestic market. That's true overseas. And you have to have a business model that gets you through bad weather as well, to say it might take us a while to get our sales up. It might take us a while to sort through our product offering here and how it has to be adjusted for the local market. We might be less interested in taking on financial risk in a market that's more volatile or where there's currency risk. We don't have that appetite. That's perfectly okay. That just means you have to adjust your business model. That probably means a bit of a slower approach. You can't simply focus on next quarter's numbers, but view this as a multi-year product because you're developing a market, you're developing a national market. We have a number of success stories out of Singapore and Malaysia, Indonesia, Philippines, Thailand, where U.S. companies are doing quite well because they've taken a few years to build up that market.
That was Ambassador Frank Lavin analyzing some of the big picture issues and also describing some of the benefits of the free trade agreement.